Imagine if the same system that made millionaires out of everyday investors could work for you too. In this video, I'm pulling back the curtain on exactly how Wall Street makes millionaires, the strategies, vehicles, and tactics the institutions and top investors actually use. No fluff. No fake gurus. Just the real mechanisms that quietly turn regular money into life-changing wealth. If you're tired of watching from the sidelines and you're ready to start thinking like the people who actually win in the markets, then do this right now. Hit the like button, subscribe, and turn on the notification bell so you never miss these breakdowns. And comment Millionaire below if you're all in. Let's get into it. Wall Street has long stood as a symbol of wealth, ambition, and financial power. For decades, it has produced millionaires, and, in some cases, billionaires, through a combination of strategy, discipline, opportunity, and risk. But the reality behind how Wall Street creates millionaires is far more nuanced than the popular image of traders shouting on the exchange floor or executives making billion-dollar deals overnight. It is a system built on knowledge, leverage, patience, and the ability to navigate both opportunity and uncertainty. At its core, Wall Street is not just a place, it is an ecosystem. It represents the global financial markets, including investment banks, hedge funds, private equity firms, asset management companies, and the stock exchanges themselves. Each of these institutions plays a role in creating wealth, and understanding how they function reveals the mechanisms through which individuals accumulate millions. One of the primary ways Wall Street creates millionaires is through ownership of assets. Stocks, bonds, derivatives, and other financial instruments are the building blocks of wealth in this ecosystem. When individuals invest in stocks, they are essentially buying a piece of a company. As that company grows and becomes more profitable, the value of its shares increases. Over time, disciplined investors who consistently allocate capital into strong businesses can see their wealth compound dramatically. Compounding is perhaps the most powerful force on Wall Street. It is not about making one big trade or getting lucky once, it is about allowing returns to build upon themselves over time. A person who invests wisely and reinvests their profits can turn a modest initial investment into a substantial fortune. This is how many long-term investors become millionaires, not through sudden windfalls, but through consistent growth over years or decades. Another major pathway to becoming a millionaire on Wall Street is through leverage. Leverage allows investors to control a larger position than their actual capital would normally permit. For example, using margin, an investor might borrow money to invest more than they currently have. If the investment performs well, the returns are amplified. This can accelerate wealth creation significantly. However, leverage is a double-edged sword. While it can create millionaires, it can just as easily destroy fortunes when markets move in the wrong direction. Those who succeed with leverage tend to be highly disciplined and risk-aware. Wall Street also creates millionaires through professional participation. Many individuals become wealthy by working within the system itself. Investment bankers, hedge fund managers, traders, and private equity professionals often earn substantial incomes, including bonuses that can reach into the millions. These careers are demanding and highly competitive, but they offer access to high-level financial opportunities and networks that can accelerate wealth accumulation. For instance, hedge fund managers often earn performance-based fees, commonly known as 2 and 20, a 2% management fee on assets and 20% of profits. When managing billions of dollars, even a small percentage can translate into enormous personal income. Similarly, private equity professionals can earn carried interest, which gives them a share of the profits generated from investments. These compensation structures are designed to reward performance, and those who consistently deliver results can quickly become millionaires. Entrepreneurship within Wall Street is another key factor. Many of the wealthiest individuals in finance did not simply work for others, they built their own firms. Starting a hedge fund, launching an investment firm, or creating a financial technology company can lead to exponential wealth if successful. While the risks are high, the rewards can be extraordinary. This entrepreneurial aspect of Wall Street is often overlooked, but it plays a significant role in wealth creation. Information and analysis also play a critical role. Successful investors and professionals on Wall Street are not guessing. They rely on data, research, and strategy. They analyze financial statements, study market trends, and assess economic conditions. This informed approach allows them to identify opportunities that others might miss. In many ways, knowledge is one of the most valuable assets on Wall Street. Those who can interpret information effectively gain a significant edge. Timing, while often overstated, also matters. Entering the market at the right moment, such as during a downturn when assets are undervalued, can lead to substantial gains. Many millionaires are made during periods of crisis, when fear drives prices down and opportunities become abundant. Those who have the courage and capital to invest during these times often reap significant rewards when markets recover. However, it is important to understand that Wall Street does not guarantee success. For every millionaire created, there are many who lose money. The markets are inherently uncertain, and even the most experienced professionals can make mistakes. Risk management is therefore essential. Successful individuals on Wall Street do not just focus on making money, they focus on protecting it. They diversify their investments, set limits on losses, and avoid overexposure to any single opportunity. Another crucial factor is mindset. The individuals who become millionaires on Wall Street often share certain psychological traits: discipline, patience, resilience, and the ability to remain calm under pressure. Markets can be volatile, and emotional decision-making can lead to costly mistakes. Those who succeed are able to stick to their strategies, even when faced with uncertainty or short-term losses. Networking and relationships also play a significant role. Wall Street is a relationship-driven environment. Access to deals, information, and opportunities often depends on who you know. Building strong professional connections can open doors that would otherwise remain closed. Many millionaires benefit from being part of networks that provide early access to investment opportunities or insider insights within legal boundaries. Technology has further transformed how Wall Street creates millionaires. In recent years, algorithmic trading, quantitative analysis, and financial technology platforms have opened new pathways to wealth. Individuals with strong technical skills can develop trading algorithms or investment models that generate consistent returns. Additionally, the rise of online brokerage platforms has made it easier for ordinary individuals to participate in the markets, leveling the playing field to some extent. Retail investors, once at a disadvantage, now have access to tools and information that were previously reserved for professionals. While this does not eliminate risk, it does create more opportunities for individuals to build wealth through the markets. Stories of self-made millionaires who started with small accounts and grew them over time have become more common in the digital age. Another avenue through which Wall Street creates millionaires is through initial public offerings, IPOs. When a company goes public, early investors and employees often see significant increases in their wealth. Those who invest in promising companies before or during their early public stages can benefit from substantial price appreciation. This is particularly evident in the technology sector, where companies can experience rapid growth after going public. Dividends and passive income streams also contribute to wealth creation. Many investors focus on building portfolios that generate regular income through dividends. Over time, these income streams can be reinvested or used to fund other investments, creating a cycle of growth. This approach may not be as dramatic as high-risk trading, but it is a reliable path to long-term wealth. It is also worth noting that Wall Street rewards specialization. Individuals who develop expertise in a particular sector, such as technology, healthcare, or energy, can identify trends and opportunities more effectively than generalists. This specialized knowledge allows them to make more informed investment decisions, increasing their chances of success. Despite all these opportunities, the path to becoming a millionaire on Wall Street is not easy. It requires time, effort, and a willingness to learn from both successes and failures. Many of the most successful individuals have experienced significant setbacks along the way. What sets them apart is their ability to adapt, refine their strategies, and continue moving forward. There is also an element of realism that must be acknowledged. The idea that anyone can become a millionaire overnight through Wall Street is largely a myth. While rapid gains are possible, they are rare and often accompanied by high risk. Sustainable wealth creation is typically a gradual process that involves consistent effort and disciplined decision-making. Ethics and regulation also shape how wealth is created on Wall Street. Financial markets are governed by rules designed to ensure fairness and transparency. While there have been instances of misconduct, the overall system relies on trust and integrity. Those who operate within ethical boundaries are more likely to achieve long-term success. In recent years, there has been a growing emphasis on responsible investing. Environmental, social, and governance (ESG) factors are increasingly influencing investment decisions. This shift reflects a broader understanding that wealth creation should not come at the expense of societal well-being. Investors who align their strategies with these principles may find new opportunities in emerging sectors. Ultimately, Wall Street creates millionaires through a combination of access, strategy, and execution. It is a place where capital meets opportunity, and where informed decisions can lead to substantial rewards. Whether through long-term investing, professional careers, entrepreneurship, or innovative strategies, the pathways to wealth are diverse. However, the underlying principles remain consistent: invest wisely, manage risk, stay disciplined, and think long-term. Those who embrace these principles are more likely to succeed, while those who chase quick profits without a solid foundation often struggle. In the end, Wall Street is not a magic machine that produces millionaires effortlessly. It is a complex system that rewards knowledge, patience, and calculated risk-taking. For those willing to put in the work and navigate its challenges, it offers the potential for significant financial success. But that potential must be earned through understanding, strategy, and a commitment to continuous improvement. If you enjoyed learning how Wall Street creates millionaires, make sure to smash that subscribe button and hit the bell so you never miss our next deep dive into building wealth. Because up next, we're revealing the 5 best trading indicators, where we break down the exact strategies everyday investors are using to grow their portfolios. You won't want to miss it. Thanks for watching. Now go out there and make your money work for you. See you in the next one.